Hey guys, good afternoon everyone. I'm Harshit from Kepler Capital. Welcome back to our YouTube channel. Welcome back to a YouTube video as well. To begin with, this is our YouTube channel where we upload trading logic, trading psychology, trading setup, trading market analysis on a daily and on a weekly basis as well. Um, with this, on a daily basis, ka market analysis. With this, we do have some series, some sort of series on a weekly basis where obviously when markets are closed we tend to upload those series. Now the the current series is like obviously the what do you call all about price action. So before this we have uploaded two series, series 1, series 2. So I request you to subscribe this YouTube channel to get latest update about trading and investing as in general. So let's begin with today's session. In last two sessions, we have seen a bunch of things, including obviously including types of trends, supply, demand. This was and what is impulsive and corrective move, swing high, swing low, higher high, higher low, uptrend, downtrend, and sideways trend. In the second session, we talked about about all about candlestick, right from single candlestick pattern, double candlestick pattern, and multiple candlestick pattern as well. And we saw like what are the strong candles, indecision candles, weak candles, average candles, etc. Today's session is super crucial and super exciting for me because as a price action trader, it's important to understand the fundamentals of the markets and the psychology of buyers and sellers. To understand the psychology of buyers and sellers, you need to understand what the price is behaving and what the price is doing and what the price will do after a certain time, certain period of time. So let's begin. So first concept is obviously support and resistance. Now, what is support and resistance? See, in the first session, we talked about supply and demand. Supply and demand and support and resistance is similarly quite a lot. In the sense, supply and demand is a zone. Basically, like let's say Nifty is trading at 19,000 or something, then support supply will be around 19,000 to 19,050 or something. So demand will be 18,000 to 18,050. This is a zone like 40-50 points ka zone. On the other hand, support and resistance is used by most of the intraday traders. Now again, support is not a certain price like a fixed price. It's obviously a zone, and price may respect to the support or resistance levels or may not respect at some point in time into your trading journey. Also, we will learn how to draw support and resistance on live charts, and obviously we love Nifty, so therefore we will see on Nifty charts as well. And also support and resistance can be drawn on multiple time frames, right from intraday time frames like 5 minutes, 15 minutes, 30 minutes to higher time frames like 1 hour day, 1 day, 2 hours, 3 hours, etc. And for long-term investments or a long-term value investor, support and resistance can be drawn on a weekly time frame or monthly time frame as well. So see, support is basically supply, a demand zone where buyers are interested to buy a specific asset. On the other hand, resistance is a demand zone where buyers are not at all interested to participate in the trade and sellers are interested to sell the asset or something like that. Um, so in conclusion, support levels have more buying pressure than selling pressure. On the other hand, resistance zone has more selling pressure than buying pressure. Or we can conclude that support levels are the levels where what do you call, buyers overpower sellers, and resistance is the zone where sellers overpower buyers. So this is the basic structure. You can see this is the resistance 1, 2, 3. Price have respected the resistance level 1, 2, 3. After, as you know, once the price respects a certain support or resistance, it converts to if support, if the price respects support for multiple times like 1, 2, 3 times in a row, then that support will become a resistance. On the other hand, where the price respects the resistance multiple times, one, two, three in a row, then the resistance will become support. Simple. You can see one, two, three resistance. Then this this level, this resistance ka level have become weak, and then market or price took a support from here. Obviously, in conclusion, resistance becomes support. Simple. Let's draw some interesting support and resistance levels on Nifty. So this is Nifty. This is 15 minutes ka time frame. The simple fundamental rule to draw a support and resistance level is to connect as much as possible points on the chart. Now let's say we have support or your resistance over here, correct? One, two, multiple times, three. Now, as per the rule, if resistance is been respected multiple times, like three times in a row, then there is a high probability this resistance will become a support. And see, this is yesterday's trading session. Right after the resistance is being breaked by the buyers, see the momentum. This momentum is approximately 80 70 points. So this is the miracles. This is the magic of support and resistance. If you understand price action in a thorough way, then I think no indicator, no overlay, no underlay indicator will help you. Like I mean, indicators are like technical signals. You don't have to think about buyers and sellers ka psychology and all of that. But to sustain and to build your to sustain in markets, you need to understand how these markets work. What is the sentiments of buyers and sellers? What is the overall sentiments, overall outlook, etc. Indicators is for scalpers and gamblers and all of that. Price action is super important. So this was the support. Let's let's take an example of resistance. Sorry, support as well. This was the resistance. Let's take over. Yeah. All right. See, buying pressure, buying pressure, buying pressure. We can consider this as an important support level because market have respected, price have respected and bounced back to a certain direction, to a certain momentum from here. Let's say, see, one, two, three. This is the support level. One, two, three. Now, after respecting three times, the probability of becoming support a resistance is quite high. But unfortunately, it didn't happen over here because market was extremely bullish. So it formed like a W pattern or something, and then continued the trend right up until over here. You can see this is the new zone. So this is the support and resistance stuff. To go ahead, what is volume? Now, volume is extremely important. What is volume? Volume is the number of buying and selling pressure at a specific time for a specific asset class. Let's say the volume of buyers is exponentially greater or higher, then obviously prices will go up. On the other hand, if the volume is lower, then prices will go down, which we can conclude that higher the volume, the number of buyers are more, lower the volume, number of buyers are less, or number of sellers are more. This is the volume. very important concept. What is pullback? Now, pullback is also known as retracement or correction or something like that. Pullback is nothing but, let's say market is in a trend, let's say there's an uptrend, then it's not like market will pump up or go in an uptrend continuously, right? Because there might be some 10-20% of sellers who will try to bring the market down. So this is the correction. This is the pullback. This is the um yeah, this is the retracement, we can say. So how to figure out the pullbacks? So let's go to Nifty chart and let me clear this because observing the chart is important. To find a pullback, you have to understand that the trend, right, in the first place, because if you don't understand the trend, then you will not be able to figure out the pullback as well. So see, this is an uptrend over here. This is an impulse. This is the pullback. Most of the intraday traders trade the pullbacks. What they will do is, they will, if an impulse happens, then they will wait for the price to get some sort of correction and or retracement or pullback. Then they will enter over here and they will join the rally over here. Similarly, the pullback is like big pullback or small pullback, a small pullback over here. Correct? If you consider huge pullbacks, you can easily see this is the pullback. Trend line break, this is the impulse, and this is the pullback. So this is the concept of pullback. Pullback can be traded easily because when market is in a trend, be it uptrend or downtrend, um, traders tend to trade pullbacks in order to make quick profits or catch the fast or fast momentums in the market, especially the option buyers. So these are the three concepts for today's session. I hope it was helpful for you. Let's meet up on next Saturday with all about price action part 4, because this was the third part. And do subscribe, share, like, comment, and yeah, keep watching. Thank you so much. Have a good one.